Are live. Hello. Thanks for tuning in again. My name is Rhea Cotton, and I'm a California real estate broker with the Cotton Company of Real Estate. And I would like to thank you for joining us for today's Lunch and Learn. So for today's Lunch and Learn topic is build back the block. Now, everybody's heard of buying back the block to basically renovate our communities and restore it. But what happens when we run out of inventory to buy back the block? And we have other investors coming into our communities that may have more leverage than we. So we have to be very creative and continue to create ways of opportunity for both buyers and investors in our community. And so that's why I brought Harry here today, Harry Payne, who's going to tell us about how we can build back the block. And that's finding land opportunities to build in our communities so that we can provide home ownership. So Harry, would you like to introduce yourself and just tell everyone a little bit about who you are?
Well, good afternoon, everybody. Great to be here with Rhea, and really excited about this new information we're going to be discussing this afternoon. I am a 30-year veteran in the mortgage lending business. I have been in the marketplace in about 6 different cities around the country, and I am now here in the Bay Area, here to help Rhea build back the block.
Thank you, Harry. And so what we'll do now is we're going to go and share the website. The website has information on the loan products that Harry's company offers, as well as a contact page, so that if you're interested in participating, if you're a contractor, you're an investor, you're a homeowner looking for opportunity, all of those we're trying to combine together. And so please, as we share this information, visit buildbacktheblock.com and share your contact information so that you can also become part of the movement. So we're going to go ahead and share that page. Let's see here. There we go. And so on this page, you will find information for new construction for buyers, as well as renovation loans and opportunities for builders. And we're going to go through all of those today. So Harry, let's start. You want to start with new construction?
Yes, let's do that.
Okay, so we're going to go more info and pull up our one-time close construction financing flyer. And Harry, I'll let you go over what the buyer perks are for this program and what it entails.
Yes. So this is the first time FHA and or VA has provided a new construction loan that combines both the lot and the home that you're going to put on that lot all into one loan with just simply 3.5% down. Now that is tremendous, because prior to this program, the best you could do was a 50% down payment on any lots out there. And then you need to put another 10% down on the house that you're going to put on that lot. So what we're saying now is that we're rolling in the home and the land purchase together, and the client only needs 3.5% down of that price, the combined price of those two things. The other benefit, as you can see, is that there is no money down if you already own land. So if you have a lot out there already, then you would have nothing to put down, because the equity in your lot would be what would be required for you to purchase, to build on that lot. Gifts are allowed with FHA, both with existing, but also with this program. And you're able to cover 100% of the down payment and the closing costs if you have someone who's able to give you a gift. And again, can be gifts can also be a lot, which is really remarkable. The seller / the builder can contribute up to 6% to cover all the buyer's closing costs and their prepaids. So that would be all the one-time closing costs, but also your homeowner's insurance, your prepaid property taxes, all those things would be covered by the builder side. Really great is the credit score requirements. As you can see, as low as 620 will get you into this program. So anybody with a middle score, that would be the 3 credit bureau scores, and taking the numeric middle, as long as it's 620 or better, you're in for this program as far as credit. There's no reserve requirements, which simply means that you don't need to show that you have all this money to make payments in a bank account. You just need to have your 3.5% down. The buyer makes 0 payments until the house is completed, which is really great. So, and then lastly, it's a one-time close, which is done prior to the construction beginning. And there is only one time qualifying and there's only one time closing. So therefore, you do not have to go and get a construction loan and get approved for that and then pay closing costs on that construction loan and then have to go to another lender and get a permanent mortgage to pay off the construction loan and have to get reapproved for the permanent mortgage and then pay closing costs again. So that's the benefit of this one-time close, is the fact that there's only one approval process and only one closing. And again, no payments during construction. So that's what FHA is, everybody. And this product is available nationwide, and Rhea and I manage it here throughout the state of California. So let's talk about
yeah, well, one thing I want to point out too is that's one of the biggest questions that people have is their the payments when they're not in the home, because they're not having to manage their current residence and a new one, but they're still able to provide that opportunity. So I think that is like one of the most frequently asked questions when you present this. It's like, great, I want to build my own home, but how can I afford to balance the financial obligation of doing both?
Yes. So, and again, with a construction loan or with this loan, you're paying interest payments as money is dispersed to the builder.
Okay.
So at each stage of the construction of the house being built, so for example, the foundation, certain amount of money is dispersed to the builder for that to be covered.
Right.
And so you're only paying interest on that money, not the total amount that you've been approved for.
Okay.
So that's the first answer. The second answer is the builder is required to tell us how long will it take to complete the home.
Right.
So if they tell us it's going to take 6 months, then we build in 6 months worth of interest payments into the financing. So that's how the client is not, how we're able to have the client not have to make payments. So they can just keep making their regular house payment. The new house is being built. It's being paid for monthly, if you will, by being already financed. And when the home is completed, presumably they sell their old home or they lease it out and then move into their new home.
Okay, great. So let's go into some of the builder perks. Because there are a lot of people in our community right now that are asking, how can I become an investor? What can I do to develop my community? And they really don't know where to start or how to start. And so I think this program is a great tool, a great marketing tool for independent small developers.
Absolutely. Let's take a look at that. And we don't have that VA duty as far as
no.
Okay, which is fine, because the only difference between FHA and VA. So for our veterans, there is no down payment. It is strictly 100% financing for our veterans. And once again, there's no payments during construction. And once again, the builder is able to cover all the closing costs and all the prepays.
Awesome.
So for our vets, this is an incredible opportunity, as it is for everybody else.
Right.
And once again, it is a 620 credit score for VA as well.
Okay.
All right, so now let's talk about our builder perks. So one of the challenges of builders is being able to get a construction line large enough to be able to build multiple homes. So as a general rule, what happens is an independent builder may be able to get $1 million line of credit from a construction bank. But in California, that represents how many homes? Maybe 2.
Right.
Maybe 2. So the builder is handcuffed as to how many homes they can build at any given time, strictly because of their line of credit.
Right.
Okay. So with this product, the benefit of it, of course, is it is the buyer's money that is financing the build. So the builders do not need to have their own construction line because they're building off the buyer's money.
Right.
Which allows them to build as many properties as they have buyers for and as many contractors that they have available to work on those individual properties.
Right. So if you're a small developer and you only have a limited amount of funds, now you don't have to wait until that one project closes to move on to the next, which is a great opportunity to streamline their process. That's awesome.
It really is. And so let's take a look at some of the perks themselves.
Okay.
Can you blow that up just a little bit?
Sure.
Okay. So for our builders, once again, it is a one-time close up front prior to construction beginning. And again, there's no requalifying once the home is completed. So what that means to our builder in particular is that if a client was building, well, let's say it this way, if a builder was building for one of our clients and the client lost their jobs during construction, let's say, for example,
Okay.
and were unable to get reemployed again by the time the house is completed. Or if you take the most extreme situation, that something happens to the buyer, physically, and they're unable to occupy the property or pay for it for that matter. So what would happen is our company would go ahead and engage the builder and have them complete the property, and then we would sell it once the home is completed. Therefore, the builder is able to absolutely complete their project and be paid for it without any risk.
Right.
Okay.
And the bank recoups their costs.
And the bank recoups our money. So again, perks again, we're able to roll in the home plus the land into one loan for their buyers at just simply 3.5% down and 0 for VA. The seller and builder, in this case, are able to contribute and cover all of the buyer's closing costs and prepays, as we discussed. Again, much more flexible underwriting than conventional financing provides in terms of FHA. Again, the buyer makes no payments until the construction is completed and the home is converted into a permanent mortgage. And again, we're talking 30-year fixed rate mortgages. Nothing crazy, adjustables, nothing. Just a traditional 30-year fixed rate mortgage if they want. And again, for the builder, a big deal is buyers falling out of contract while the home is being completed.
Right.
So in this case, as I mentioned before, there's no risk of the buyer or borrower not requalifying once the home is completed, because we qualify them only once and we close up front. So there is no requalifying again. So the builder doesn't have to have that concern. The builder, we're able to do as a standard, just 5 construction draws available after we close on the lot. And if the builder wants additional draws, they're able to request those.
Right.
Okay. It's roughly $150 per additional draw that they may want to draw for. Exactly. But they're given standardly just 5. Again, we're able to offer these buyers a brand new home with simply a 620 credit score without the hassle of requalifying. And again, for our builders, we're financing up to 90% of the construction funding. The remaining 10, of course, the builder gets upon completion of the property, which is generally their profit. Any questions for our builders?
No, yeah, I was just looking online to see if we had any questions pop up.
Okay.
The great thing about this is it will be recorded, so with Harry's information. So if you have any questions in the future, even after this recording, we'll leave Harry's information in the comment section so that you can reach out to him at a further date.
That'd be great. That'd be great. One other thing I want to mention, as far as both buyer and builder perks with this product, is that it's not just a lot that's in between someone's homes that, here in the city or what have you, but a client and a builder can go out to a development, a large development, for example, where they have, let's say, 30, 40, 50 lots out there. Well, it will take years for a developer to build on all those lots. So it is very commonly available that if you approach any of these developments and talk to the developer about purchasing inside their development, one or more of their lots, and you will find that you're probably going to get a 90% yes rate.
Right.
Okay, so it's great that you're able to build or buy and build any infill lot that you may drive past on your way home every day, or you can go out to a development and discuss buying a lot within the development as well.
Definitely.
So,
okay. So let's take a look. I just want to give our viewers an example of how this program works with a current listing. So currently on Zillow, I have coming soon 425 Market Ave. So this is currently a lot that would be able to, you'd be able to take advantage of the opportunity, because the building of this property has not yet begun. It's still a lot, and we're just finishing up on the permits. But the developer has a plan for this home, and he has it's a 2-story, 3-bedroom, 2-bath home. So all 3 of the bedrooms are upstairs with a master that has a bathroom, and then there's also a bathroom downstairs with a 1-car parking garage and a living room area. What's great about this location, it's only 10 minutes away from the upcoming Richmond Ferry that will be located near the Crane Pavilion. So there has been a lot of interest in the Richmond area because of this. And so this is a great opportunity to lock in a future investment in this area. So just wanted to share that. If anyone has any questions regarding this listing, they can give me a call at 510-385-0409 or visit my website, riacotton.com. But opportunities like this is basically why we're all working together with investors, developers, contractors, lenders, and myself as a real estate broker to make these opportunities available to our community. And then it's basically on you to take advantage of that opportunity and really make the commitment. So we're going to go back to the website, and we talked about buy back the block, and building new construction, but we're also going to talk about renovation financing. So I'm just going to go to, let's see, Harry's website. And do you want to start off with the video, Harry?
Yeah, let me do a quick introduction if I can.
Okay.
So what we're discussing now is being able to find a fixer. That's something that in this area, as far as our market here being so expensive, you know, for our first-time buyers in particular, being able to pick up a fixer, you know, below market and be able to renovate it to get it the way they want it is really huge. Now, the problem is that most people don't realize that this product called the renovation loan is called the 203K loan. It's available both FHA, which only allows for primary residence, but it's also available under conventional financing, which we call the home style loan. And that allows for both primary residents and investors to be able to utilize this product. And you can use this as long as there's at least a foundation. And then from there, you can renovate from that point up. So this video we're going to watch here just illustrates how you can take a fixer and make it the home of your dreams.
Okay, great.
Ooh, check these out. It says they'll help you see what your home could be like with a dream loan from Primary Residential Mortgage.
Wow.
It says we can borrow up to 10% above the value of the home. That's like $30,000 to fix up this house.
Oh, that's beautiful.
Can you see those? I'm thinking man cave.
Not a chance.
VA loan is the most popular loan in the country, except out here. I don't know what it is about California agents that they're just like scared of VA loans. And the only difference between a VA loan and any other loan is that VA loans require that the
pest is clear.
The pest inspections are clear.
Right.
That's
Which
it.
anybody should want on their house, right?
I'm thinking,
Right.
I mean,
Even on a conventional loan, if you're doing a home inspection or pest inspection and you see items come up, you're negotiating with the owners on that work. So that is nothing out of the ordinary. And there are a lot of veterans that are out there with their certificate of eligibility that can get into homes. When I was on the loan side, I'll never forget, I was working with Wells Fargo, and I had a veteran contact me. He was living out of his car, and he had his VA certificate, and a friend of his that could give him $500. I forgot what we used the $500 for, but he got himself into a home from his car with a VA loan. I will never. That was the most heartfelt transaction that I ever had went through, and he was in Stockton and I was in Oakland, so we did everything by phone, and we finally met at the end of the transaction, because even though I wasn't the realtor and I was on the real estate side, I just had to meet him.
Absolutely.
And so I mean, if you have veterans in your family, encourage them to use their certificate, take advantage of the opportunity that they have, and provide them with that home, help them, assist them if they can assist themselves in getting information on how to make their dream a reality and make use of that certificate.
And, on that particular point, you and I have talked before about creating a all-veteran new construction community.
Right, community, exactly.
And the benefit of the VA for the one-time close loan for our vets is, again, it's 100% financing, so it's 0 down payment for our vets. But just as importantly, you still have closing costs, right? And prepaids. Well, the builder is able to cover 100% of all of that.
Right.
So for our vets, it literally is a no money down situation, both in down payment and in closing costs, prepaids.
Right.
They just need to have their 620 credit score, and then they can build wherever they want and not worry about termite.
Right.
Because it's going to be a new home. So
you developers out there, if you have land, we actually have people that also can assist you with learning how to divide your land. So if you have a large amount of land, you can divide that land into individual parcels to provide even more opportunities. So if you have some opportunities, please visit the site. Please reach out to us. Let's all come together and make home ownership a reality for our community.
Absolutely.
Yes. Thank you, Gary. Thank you for coming in.
It was great.
I appreciate it, and I'm so excited about our movement going forward, and I know it's going to be a great success.
It will, and we're looking forward to building back the block.
All right. See you guys later.
Thanks, folks.